Welcome back everyone to the Audacious Money Witch channel where we talk about the magic behind the stock market. So the S&P 500 is hitting new highs, which is cool and all, but my gut is telling me valuations are a bit sus. Especially with those huge growth stocks, but get this, Salesforce stock. They've been left out of the party this year. Investors were side-eyeing their AI game and their core business were kinda slowing down. What exactly happened? Since the start of the year, Salesforce shares have dropped almost 20%. Wild, right? But here's the glow up. The company actually boosted its expectations for the year. Why? Is this a great time to jump in? Honestly, now it's time for us to evaluate if Salesforce is still a good bet. Why Salesforce might be low-key fire. Here's why I'm thinking Salesforce could be a solid pick. Product portfolio is stacked. Salesforce literally has one of the broadest product lineups in the enterprise software world. Need stuff for sales? They got you. Enterprise messaging with Slack. Yep. Marketing automation. API designs with MuleSoft. Also there, plus a whole bunch of other uses. With the economy being a bit rough, companies might actually start consolidating their vendors. And who benefits? Companies like Salesforce. Who can be a one-stop shop? Agentic AI is the main character. In my opinion, Salesforce is straight up leading the charge in developing and implementing agentic AI technologies. Like every software company is dropping some AI features these days, but most are just rehashed basic stuff. Intelligent Rex, Copilot vibes, analytics. The real flex with AI is when AI agents can actually replace human labor. Salesforce Agentforce product has already hit over $100 million in annual recurring revenue, and it's making their overall data cloud grow even faster. Margins are thick as fuck. Salesforce used to be all about growth at any cost, but after 2020, CEO Mark Benioff made a hard pivot to focus on profitability. They slowed down their mergers and acquisitions, even laid off a bunch of workers this year. The result, margins in the low 30s, which basically puts Salesforce in the Rule of 40 club. That's a big deal. Despite all these wins, Salesforce is actually trading at a pretty chill price compared to other big enterprise software companies, growing at a similar pace. Right now, shares are chilling around $272, putting their market cap at $259. After you factor in their $17.41 billion in cash and basically no debt, I can see this company reach $1 trillion market cap in 5 years. For fiscal year 2026, Salesforce even bumped up their outlook to $41 billion, which is an 8 to 9% year-over-year growth. That's a full percentage point higher than their previous prediction. Their new EPS expectations are also about 1.5% higher than before. Currently, Salesforce is trading at 6.1 times price to sales. When you compare them to other enterprise software companies, Salesforce actually looks like one of the more value-oriented options out there. Why this might be the moment to hop on the Salesforce train? Honestly, I think now's a great time for investors to start buying Salesforce while the stock is still relatively discounted. Plus, there's serious upside potential from the growing momentum of their Agentforce products. Salesforce revenue grew 7.6% to $9.83 billion, beating Wall Street's expectations by a full percentage point. However, the core slowdown was mainly in their sales CRM and marketing cloud products. The why behind the slowdown. To a large extent, this slowdown was expected. With consumer spending being weaker this year, companies have been pulling back. This means cutting staff in sales departments or just hiring slower, which directly impacts products like Sales Cloud that are priced per seat. Companies also cut back on marketing and advertising, along with reducing headcount in those departments. But Salesforce is all in on AI. Mark Benioff, Salesforce CEO and founder, spilled the tea that the company now relies on AI for 30% to 50% of its entire workload. Like many other tech giants, Salesforce is going full send on the AI boom. All of us have to get our head around this idea that AI could do things that before we were doing, and we can move on to do higher value work, Benioff said. He's talking about AI doing things like software engineering and customer service. It's these agents, these digital laborers, digital employees who are out there doing this work, servicing the customers, selling to the customers, marketing to the customers, partnering with me to do the analytics, the marketing, the branding. Benioff even said he writes his yearly business plan with an AI partner. Alongside a human Salesforce executive, he added that the company is on track to have 1 billion of these agents before the end of the year. Apparently, 65% of companies are now experimenting with AI agents. Benioff also estimated that Salesforce has reached 93% accuracy with the AI product they're selling to customers, including Walt Disney Company, which was developed to handle tasks like customer service without human supervision. He mentioned it's not realistic to hit 100% accuracy and that other companies are at much lower levels because they don't have as much data and metadata. Salesforce stays winning. The software giant was ranked the #1 customer relationship management software provider in 2025 for the 12th consecutive year by the global market intelligence firm IDC. Salesforce's client list is stacked, including Apple, Boeing, Amazon, Walmart, and McDonald's, just to name a few. The tiny team era is here. According to Bloomberg, AI is kicking off a new era of the tiny team. Gone are the days of Silicon Valley companies hiring like crazy as they grow. Now tech companies are competing to see who can manage the lowest headcount to cut costs and boost efficiency. Benioff said Salesforce has built a deeply unified enterprise AI platform with agents, data, apps, and metadata platform. With Agentforce Data Cloud, our Customer 360 apps, Tableau, and Slack, all built on one trusted, unified foundation, so companies of every size can build a digital labor force, boosting productivity, reducing costs, and accelerating growth. Data Cloud and AI are crushing it. What's really impressive is that the company's Data Cloud and AI annualized recurring revenue has now hit over $1 billion, up more than 120% year over year. Of course, there are some risks CRM stock is facing. Stock market could have a pullback, so I might grab some shares when that happens. Macro conditions are still tight, and since sales and marketing clouds are still make up 37% of their revenue, more headcount pressure in these areas could keep squeezing growth rates in Salesforce. That being said, I think these risks are outweighed by the promising growth in Agentforce. Plus, the pretty chill valuations that make Salesforce a great long-term investment.